It's been interesting. When the yield curve inverted, a lot of the financial media was on inversion watch or some other such terminology. But over the past few sessions, much of the yield curve has returned to its normal shape. We pretty much have a normal looking upward sloping yield curve, actually a relatively steepish one, between, let's call it the 5-year and 30-year period on the curve. There is still a bit of an inversion between, let's call it 30-day paper and 1-year paper. There's also a little bit of a kink around the 2-year number. But for the most part, we have a more upward sloping yield curve. It's not a complete normal yield curve. But the fact that at least in the longer term, we're sloping upward is somewhat significant. I think for starters, it does take away a bit of the perceived recession risk. Now, some of that's backwards looking. A lot of the times, and a lot of the scarier thing is that sometimes the curve uninverts at a time ahead of a recession. Markets do get it wrong that way, and the fact that it did invert may be more important than the fact that it's no longer inverted. Also, you have to wonder whether that is truly a sign that the longer-term investors, or longer-term fixed income investors, I should say, are seeing potentially better growth prospects for the economy or potentially higher inflation expectations. All in all, in general, that's a good thing. But again, the thing I would caution about here is just because we're seeing the yield curve get a bit more normal, A, it's not normal yet. There is still a short-term inversion. And B, that's not in all clear necessarily, because there are historical precedents, most recently 2007, 2008, where we inverted, uninverted, and that during that period where the yield curve started to move toward normalcy, it was actually a pretty rotten time for the economy in general. The short-term inversion is one that I wouldn't worry too much about. I think that's more related to expectations of the Fed movement, and I'll touch on that in other videos and have touched on it in other videos. But it's definitely something I would say that in the short term, the markets in general should be happier that we're seeing a steeper yield curve. Overall, it is not at all clear, but it certainly could bode that way. But we need to see a bit more follow through on the economic front to really give that the warning sign, that to take down the warning sign and say that all is clear going ahead.